Good morning. Oh, that's nice and loud, isn't it? Good morning, ladies and gentlemen. Good morning. Oh, that's nice. Thank you. Good morning. It's the last day, and I'm very happy to see some faces here, some familiar faces as well. My name's Kerry Stevenson. I still have a voice, unlike some people. This morning we're going to hear from Sam Spring. He's the Managing Director of Kincora Copper. Kincora is listed both on the TSX and the ASX, and the ticker code is KCC. I am also on the advisory board for Kincora Copper and delighted to be working with Sam. It's a very exciting time for Kincora. We have just recently divested of our Mongolian assets, which has put a nice amount of cash into the Treasury, which allows us to focus fully on the assets in New South Wales. Now, this is a prospect generator, and I'm going to allow Sam, obviously, to talk more about that, but I think that in the future there's going to be some really interesting discoveries to be made, and our partners, such as AngloGold, are pretty excited as well. So please welcome Sam Spring to tell the Kincora story.
Fantastic. Thank you, Kerry. Thank you, everyone, for coming along. It's a big conference. There's a huge amount to digest, and getting up at 7 o'clock on the last day is an appreciated effort. Please shout any questions as we go. We'll try and make this as interactive as you want it to be as well. As sort of Kerry touched on, copper gold exploration in New South Wales, Australia. The key with any exploration play really is the team. Exploration's venture capital, it's risk capital, it's not easy, it's hard. How do you get the numbers in your favour? It's really drilling as many good targets and de-risking those targets as best you can, and really pulling that portfolio and designing those programs with a strong technical team. That's what we've got in place, and I'll go through the team. As Kerry touched on, we've pivoted focus to a prospect generator model. That's the reason I guess I'm here with Rick coming on the register. He recognised that change in funding model. We were very, cognizant of dilution, and that's where we ultimately changed that funding model the end of 2024, which led to Rick and Jeff Phillips coming on the register. That deal was announced at this conference last year. So I guess differentiated. Everyone has a slightly different play on what a prospect generator is. We refer to ourselves as a hybrid prospect generator, meaning that we do some sole-funded exploration ourselves with our own balance sheet. We also try and utilise both with our asset level partners and our general approach, modern technology, and we've got a number of different asset level partners that are bringing new tech, and I guess that's one key thing. AI is going to change the industry. We're trying to be early adopters and try and use different methods to, again, improve the odds of success. We'll talk about that in a little bit more. Team I just touched on, a track record of big copper gold systems, which is exactly what we're looking for here. Probably you wouldn't manage your investment portfolio with only one or two bets. You generally have a diversified portfolio. When you're coming to exploration, which is particularly risky, not a bad strategy to have a diversified portfolio. The traditional exploration model, generally the market only gives you capital for one or two projects. What we've got within ours is 8, and I guess that all of those 8 give you material upside, but it spreads that risk profile. Not sure how many people are familiar with New South Wales. I heard a couple of accents on the way in that probably are familiar. But Central West New South Wales has 2 key belts within it, the Macquarie Arc, which is Australia's leading porphyry belt, and also the Cobar Super Basin, where there's plenty of corporate activity, and I'll walk through that. Two regions that have tier 1 assets and plenty of existing infrastructure, no seasonality, and relatively favourable operating costs. Balance sheet, obviously really important. We've changed the funding model. Predominantly, most exploration is being incurred by our partners at the project level. We are very well capitalised at the moment, as Kerry touched on. Only last week we announced a definitive agreement for divesting our Mongolian assets. That deal brings in 10 million US into Treasury. We already had 7 million Aussie on the balance sheet at the last quarter end. We should see our cash position increase last quarter, this quarter, and with a little bit of luck in the December quarter with the last tranche coming through. So The prospect generator model for us, we've seen over 100, well, potentially over $100 million worth of partner funding being committed from the deals that we've done to date. Of that, we've seen 10 million go into the ground so far. That's supported over 20,000 metres of drilling across 7 different licences so far. And for the 2 earnings that we've got with AngloGold Ashanti, we receive a management fee of 10% of expenditure. So there's a small income stream there. As I'll sort of touch on, there's a few more projects that we're looking to do deals for on this same operator management fee income model. We'd like to think that we can get to a position where we ultimately have corporate costs covered by income stream, and then you've got significant leverage and optionality going forward. As Rick sort of puts in here, if you want to speculate in the exploration game, this business model is probably mathematically the best way to do it. There's various different reasons for that. I think ultimately you get to a scenario where you have 1 + 1 = 3 in terms of the partners work together, and it's not just capital that they bring, there's technical expertise, there's synergies. So your odds of success are improved. Obviously access to capital is streamlined, which is obviously a key element to us as an exploration industry given the cyclical nature of it. But also it means that it's scalable. You can have more shots on goal, you can have more projects, and again, that means that the odds are put into your favour more often. So what's our oh yeah, please. It is, yeah. So we've got 2 earn-in agreements with AngloGold Ashanti where we're the operator. They can call that off us at a certain point in time. But as we're the operator, we receive 10% of expenditure as a discretionary income stream. So if we've spent $6 million to date, which is roughly the number, that's $600,000 that we've received that covers corporate cost, or we can spend on other exploration activities. So it's pretty unusual for an explorer to have an income stream. But it's certainly an approach that we want to apply to some of these other projects. In Australia, you don't hear of this business model particularly, but when you explain it to people that you've got a group that comes in, looks under the bonnet, does their due diligence, gives you the money to fund that risks and pays you for doing that, it's a pretty attractive scenario. So with our sole-funded exploration strategy, as Kerry's touched on, Mongolia was historically our flagship asset. We pivoted focus to Australia in 2019, 2020. We've just gone through and divested that. That's obviously great to be able to recycle some capital. We're currently drilling at our Condobolin Project. I'll touch on that project in a bit, but we think that's a profile that you don't have to spend too much money or have too much time to add significant value to. Some of these, I guess, more flagship projects where we've spent most of our time and capital previously, we're doing activities in the background to work those up to a stage where we think we can add more value when we have partner conversations. So this is where we are, Central West New South Wales, very good infrastructure, culture of mining, some world-class mines. The biggest, I think, a lot of people in the room probably know of is Cadia. Cadia is 50 million ounces of gold, 10 million tonnes of copper. One really common question I've had this week is, how do we think of this district? Is it a copper district? Is it a gold district? And the best way to probably answer that is it's both, yeah. But Cadia, until relatively recently, was Australia's biggest gold mine with negative operating costs because of the copper credit. It's also Australia's biggest copper mine with a lot of gold. So you can sort of flip it that way. But that's important for us because when we're talking about partnerships with different groups, it lends itself to the diversified majors, the copper majors, and also the gold majors. All 3 of those categories play in this space and are looking at this belt given the scale of the opportunities. Down to the southern section of this belt, you've got about 160 million ounce gold equivalent resource inventory. As you go further up to the north, you generally go under moderate post-mineral cover, which means exploration is a lot less mature. And I'll talk to you in terms of what we're doing with AngloGold Ashanti, and that we think potentially being a new province scale opportunity. But 7 projects here in Central West New South Wales. We have our Condobolin Project sitting in the southern end of the Cobar Basin. The Cobar Basin is a different back arc to the Macquarie arc. It is also got copper, but other critical minerals, silver, lead, zinc. It's a really polymetallic system, quite often with good grade. You have in the Cobar district existing mills that aren't being utilised. So to summarise, you've got a really attractive scenario that if you can find an economic ore body, there's a long excess milling capacity, short ore, and that's supporting a bit of corporate activity taking place. I should also probably mention, as you come over here to the east, you've got generally smaller land holding. You're within weekend drive to Sydney. Very good rainfall, beautiful country. There's a bottle of wine that I think someone might win if they found a business card under their serviette, but we'll address that at the end. That's from this district. But as you go further west, it's more marginal rainfall, larger land holding, pretty pragmatic farmers. But it's a very good area from exploration and plenty of activity taking place. There has been a 15 million ounce gold equivalent resource inventory discovery at Boda Kaiser. There's been 10 million resource growth recently at Cal. The Spur project is a really good new emerging discovery made by Waratah, where a couple of years ago it was a sub 10 million market cap. Now it's over 200, with plenty of rigs drilling out a really emerging discovery. So the majors are active in this region. Cadia, North Park's changed hands over the last couple of years. The inferred value for those deals was about 18 billion. Up in the northern part of the Cobar district, you've got CSA. That changed hands last year, 1.6 billion cash, with Harmony entering the district. In terms of exploration, you've had a number of earn-in deals with majors partnering with juniors that has unlocked potentially over 400 million Aussie dollars worth of exploration activity. So while this part of the world's probably not so well known in the US, it certainly is a hive of activity. So back to Kincora, 48 million shares outstanding. As important as that being a low number, it's who they're held by. Reporting insiders, board and management own about 25% of the company. As mentioned at the intro, Rick Rule and Jeff Phillips came on and led a financing last year. That investor group accounts for about 20% of the register. When we were explaining our business model, the pivot and the roadmap, at Rick and Jeff's election, we did that financing with a 12-month hold. It got quality investors into the book, but it also gave us the right lead time to execute on what Rick often says, what are your unanswered questions? And the unanswered questions and the strategy were really driven by ramping up exploration and doing further deals. And I'll run through each project briefly to explain that. In terms of the cash, again, sort of pretty good position. Just this week, we received the next tranche of the Mongolian divestment, 3.5 million US, which is about 5 million Aussie, 5 million Canadian, which brings our cash balance well over double digits, with another 5 million US expected before the end of the year. The technical committee, with the orange backgrounds, led by John Holliday. John's on our board and he's chair of the technical committee. He's one of the foremost experts in New South Wales porphyries. He's best known for originating and leading the discovery phases at Cadia. He's still based in the district and very hands-on. He's supported by Peter Lehman, our VP of Exploration. Peter's probably best known for the Reko Diq discovery in Pakistan, a very significant copper-gold system owned by Barrick today. Peter's also was involved with a number of other epithermal and porphyry discoveries with BHP, and then he was with Panos before the Chinese acquired that. So two guys that know what to do, and quite often it's sort of like sporting success. You see repeat offenders. They know what to do along the course of the journey, and while the odds aren't in your favour, they seem to have repeat success. I joined the technical committee from the financing side, just trying to make sure we've got the right corporate strategy and spending the appropriate amount of money. As touched on, we've got 25% of the register here. James Durant represents our second largest shareholder. He's managing director from an ASX Explorer, so he understands the industry very well. Luke Murray is Chief Operating Officer for the Bloomfield Group. Bloomfield have got a couple of operational mines in New South Wales, and they're our largest shareholder. I should mention Cameron Macquarie, very hands-on, non-executive chair, 28 years at Rio, built 4 construction projects in 3 different continents. The last role was in Mongolia for the Merritilga project, where Cameron saw over $6 billion worth of investment in getting the open pit into production and commencing the underground development, which will support that being the world's 5th biggest copper mine for probably the next 100 years. So a very strong, I guess, skill set across the board, primarily exploration, but also up the value curve. In terms of the advisory board, thank you, Kerry, for the intro before. There's a few familiar faces that you've probably seen this week. Jeff Phillips, Brent Cook, Michelle. This advisory board was formed after we did that financing with Rick and Jeff to really augment the team and also build up our presence into the North American capital markets. We're dual listed on the ASX, the TSX. About half our shares are on both markets, and the liquidity is probably better on the TSXV on the North American side. But a key element of that has been the advisory board in terms of helping us not only with strategy but also with the capital markets. So the portfolio. I'll briefly run through each of these projects, but you've got partners there: AngloGold Ashanti, Fleet Space, Atom Ionics. Another partner that we have, not at any specific project that I should mention, but across the whole portfolio, is Geomorphic AI. It's a new AI group that's helping us with reviews both of existing projects but also new opportunities. One thing about this business model that it is scalable, so we're also looking at new project opportunities. As you can probably expect, we've got a number of projects here that we've got listed as discussions ongoing. We want to pursue that management fee model, getting some other big names in. Some of those have been our flagship assets, where we've invested significant time and capital, and I'll briefly run through those. So Condobolin, we're sole funding this exploration ourselves. Here's a very good feel for the terrain that we're operating in. Pretty much agricultural and very good existing infrastructure. The Cobar Super Basin is one that is known for the high-grade deposits. As touched on before, Harmony entered the district with a $1.6 billion cash acquisition. You've then seen Arius do a deal with Peel Mining. Arius's mill is Triton up in the northern part of the belt. Peel's deposits, they're at a resource stage, sit over 100 kilometres away, and that again illustrates part of the logic of our strategy with Condobolin, that if you have good grade, there's existing mills that are seeking to supplement their existing production profile. So the district's long milling capacity but short production. Condobolin sits down in the southern end of the belt. We've consolidated this licence, which is a historical mining field. There's a mill at Mineral Hill owned by Kingston, which is 45 kilometres away on a sealed road, where most of the workforce comes from the Condobolin township. That mill is looking for third-party ore. So the strategy for how we commercialise that is very different to a large porphyry project. So Condobolin, just a quick overview. Historically, mining was impacted by the water table, and that obstacle has created the opportunity now. It's easy exploration by modern standards times. We think is an intrusion-related system at depth, but you've got some polymetallic mining operations all across the project. Big geochemical footprint with coincident geophysics at the Merritilga discovery that was made the last commodity cycle by the junior that we've inherited and bought this project from. A good intersection there of 4 metres at 20 grams at shallow depths with a bit of base metals there. And that's the low-hanging fruit that we think that we've got there, is that you've got a lot of smoke here under very small, limited cover and pretty cheap and effective exploration. various different deposit styles from some of these mines that have had informal activities in the past. This is what our prize really is. We think there's a larger intrusion driving this that can provide real scale in addition to the grade that we're seeing near surface. But that last phase of exploration before the commodity cycle downturn by that junior had pretty good results at a number of different prospects. The reason for showing this is that these styles of systems are generally vertically extensive. You can see CSA's Harmony, the CSA mine owned by Harmony, is multiple series of lenses that are vertically extensive. They're mining 3% copper down at 800 metres depth plus. Achilles is a good discovery made by Australian Gold and Copper recently. They followed up good grade near surface with that same thesis in mind, that these quite often repeat in lenses and are vertically extensive. That's what we're looking to do with the current drilling program that we've got at Merritilga. These three sections are all on the same scale, to put it into perspective, and you can see some of that pretty favourable grade is just open, down dip and a long strike. And we're just on hole 9 at the moment with that drilling program, looking to step out over a sort of 600-700 metre strike, see if there's significant scale to this. And if there is, we've obviously got the funding on the balance sheet to follow this up. So the porphyry projects, and this is drilling at our Nevertire South project that's currently ongoing. Again, a really good example of the terrain that you're operating in, predominantly wheat fields. Again, just a really quick recap. I think I sort of touched on this. You've got a number of majors active in the region. You've got a number of juniors with good exploration results and success. It is proven to be a really fertile region that most of the global diversified majors, copper majors, gold majors have had to have a look and have to have a strategy of, do we want to operate within this region? And that's leading to M&A at the producing asset perspective, but also these deals with juniors. And that's important given the business model, the hybrid prospect generator model that we're pursuing. So the northern part of the Junee Narromine Belt, just putting this into perspective, right up here. We've got AngloGold Ashanti funding that with that management fee. It's 100 k's north-south. This potentially is one of the biggest land holdings that a junior has got in porphyry terrain anywhere globally. To put this into perspective, Vicuña in the Central Andes, you've got 4 discoveries across a 40-kilometre strike that's being valued by the market at over $10 billion that are still at the discovery phase. It's a big thing to say, but what we're looking for here is multiple discoveries, but you need the right partner with the right balance sheet. So far, AngloGold Ashanti, with its own exploration in this district historically, it partnering with another explorer and with us, has invested over $30 million to date pursuing this strategy and validating the targets. Our results so far, we've drilled 39 holes in total, some up at Nyngan. We need to come back there and we're planning on doing that. Sorry, I'll go back the other way just to put this on the map. The Nyngan licence is this one right up to the north. We'll come back and do some drilling there later in the year, but our focus of activity has been down here at what we call Nevertire South. When we did the financing last year with Rick and Jeff, our view, we'd been drilling Nyngan, we'd confirmed this general concept that these are Macquarie Arc rocks. But since then, we've been drilling down at Nevertire South, and we're very excited by what we're seeing. We think we are into a new province here with a number of new complexes being identified. So at the immediate target scale, again, this is pretty broad-spaced drilling. You're seeing copper and gold grades that are suggestive that you're close within, if you use the Cadia model, within 100 to a couple of 100 metres away from the core of these systems. Given it's so sparsely drilled, we're not yet knowing whether that's down dip, east, west, but again, having the deal structure with a committed partner is the key. We're exploring further down to the south because where we've started may not be the best place to be. There may be other complexes that should be higher priorities, and it's trying to get that balance right. Again, using the Cadia example, and if I think there's presentations on most of the desks. It's a bit hard, I'm sure, to see this, but the geochemistry is looking extremely favourable. And maybe just touching on Nevertire South one more time. We had AngloGold Ashanti's global exploration peer review take place this week. They had a team of 8 individuals come out to site, do a review, and I think it's pretty fair to say they walked away extremely excited. And I think once we do our next quarterly JV meeting, there'll be some further news on what that means going forward. Cal East, and again, this is an early stage project, but I've put it number 2 in the porphyry deck to try and illustrate that this portfolio approach, there's again a strategy for each project. Some of these things will take time, but they're fundamentally important in terms of extracting value. And like the Mongolia transaction, that was just sitting in the portfolio. Then all of a sudden overnight you have 10 million US come out of nowhere, and no one was expecting that. So these sort of things incubate in the background, and while you've got the rigs turning on a couple of other projects, it's really important to be advancing that portfolio with a clear strategy. And the strategy here has been to expand the licence portfolio by 40%. We're able to pick up the ground immediately to the south of Cal East. We've done some ground gravity. We've got a deal with Atom Ionics, a new generation gravity provider that's going to come in at their cost and do a survey. We're in conversations with a number of major mining companies about the Cal East project, because we're literally the other side of the lake from Lake Cal, which is Evolution Mining's largest producing asset with 14 million ounce gold equivalent resource inventory. The Marsden discovery down to the south is one that John Holliday, our technical director, made. It's got a post-mineral thrust fault, but Evolution estimates that before that thrust fault cut off the bottom of the ore body, that was potentially 8 to 10 million ounces and 5 million tonnes of copper. So really prospective location where there's just been very limited drilling on the Cal East project. Wongarbin, we got a cooperative funding grant, drilled the first ever hole into that last year. Technical success confirming these are Macquarie arc rocks. We did a deal with Fleet Space. Fleet is a space and mineral exploration company. They did a survey at Boda Kaiser. This is about 15 million ounce gold equivalent resource inventory. That survey supported our thesis that those structures that those ore bodies sit on continue into our ground. So again, that's an earlier stage project, but you're trying to find a partner that's got something that gives you a competitive advantage that will help your exploration more than just getting the money to drill. Fairholme, this is an advanced exploration project. The last group to explore here was Kaizen Discovery, which is now Ivanhoe Electric, Robert Friedland's group. There's been about 60,000 metres of drilling here. We know there's a big mineral complex to the south and to the north. Immediately up to the north, you've got Newmont earning in with a junior, and as touched on, the gold corridor down at Cal is 14 million ounces. We have had an independent geologist that did a review for a major last year, just complete a review for us, identifying specific drill holes, programs. We've had then geomorphic AI come in and do a review and also critique the work that was done by that geologist. We're now going through that process of looking to speak to major mining companies about getting a partner in there. But also, given we've got that 10 million US coming in, do we do some sole-funded exploration activities ourselves? The geomorphic AI review and the independent geologist review also had some targets that continued into open ground. And you can see this stripy ground up here. We only in the last month pegged that ground. And again, this business model, we're looking to make it more scalable. Our Trundle project was really the reason for pivoting to the prospect generator model. We've put $12 million of shareholder capital into Trundle. The last group that was that was earning into that project was High Powered Exploration, which is now, again, part of the Ivanhoe Electric Group. There's 10 kilometre geochem anomaly from shallow drilling. There's been over 80,000 metres of drilling. Friedland's group did geophysics there. They drilled one target. They made a new discovery. We think it's a rifted off part of North Parkes. North Parkes is the second biggest porphyry mine in Australia, 24 million ounce gold equivalent resource inventory. This project, very similar to Fairholme, really belongs in a major mining company's portfolio, and that's the natural parties that we're speaking to at the moment. Similarly to Fairholme, we've done that review process and now running a formal process to speak to potential asset level partners. We had Earth AI doing exploration on this project. It sits south of Boadicea, north of Cadia and Cargo. This has a known mineral system to the north and to the south. Earth AI were not doing as much active exploration as what we liked, so we called this asset back. There's a number of really good targets. We've again had Geomorphic AI do a review and the independent geologist do a review, and there's a number of conversations that we're having with potential regional consolidation and other groups. I'd expect to see some news on this project relatively soon. So sort of why wrap up? Let's look to wrap up here with the why invest slide. I guess hybrid project generator, multiple shots on goal, predominantly funded by partners that bring technical expertise and new technology to the portfolio. Driven by a team that's found big discoveries before and has that track record with skin in the game, equity ownership themselves. A portfolio approach, every project's got a strategy, and some of those are long-term slow burn strategies. Some of those are really at the drill bit, with 2 projects being drilled at the moment. Large scale prize. What we're looking for is something that would be globally significant in the copper and gold space, and a unique scenario where you've got exploration going on but a balance sheet increasing, with the Mongolian transaction on track, and quarterly cash positions expected to increase during the year. So with that, I'll open up the floor if anyone's got any questions, but thank you for coming along.
Because you can use that one. You got another one? All right.
Beautiful. Thank you.
Just give me a second so we don't blow.
No worries. All right, Sam, lovely talk, really enjoyed it. Can you tell me approximately what size market cap you need before the Australian institutional investors get interested?
Yeah, that's a pretty good question. We're probably on the cusp of that sort of threshold. Some of the smaller specialist resource funds look at this sort of 50 space. Generally, 100 plus is preferred. A factor of that also is liquidity as much of anything else. One of the pros of having a tight register with probably only 55% free float, the liquidity is an issue for some institutions, but I guess what we're in the game for is discovery success, and I think ultimately if the discoveries come, that'll sort out the liquidity and also sort out the institutions.
You're all very quiet this morning. Anyone else? Any other questions?
Sam, when you go ahead and want to make a sales pitch to a prospective partner, what kind of information do you present to them? How deep? I mean, is there a single hole drill or just geophysical, or what kind of information when you pitch them?
Yeah, and different groups have different remits. So say AngloGold Ashanti, that portfolio we've got 100 Ks north-south, that's really early stage exploration. There's not many groups that would be interested in such a conceptual level. A lot of those licenses have never been drilled before. The work that we've done to date by far is more exploration than anyone's ever done across that portfolio. But then you go to, say, Trundle, where you've had 85,000 metres of drilling, you've had a lot of geophysics, there's a lot of vectors straight there, and that fits the remit for a lot of the majors probably a bit more naturally in terms of you've got data there that you can really vector off, and that's where these reviews that we've just done in terms of presenting targets, presenting work programs, presenting budgets, that also helps us frame the conversation of what a deal could look like. And I guess one thing that's really been good within this region for us, for Trundle and for Fairholme, is the success that Waratah's been having with the Cargo Spur discovery, because that similarly is a relatively mature asset where you had some good geology done and you had some geophysics, and then you had a geological team that came in with a new concept, and that new concept has led to this huge exploration success that they're having. And that's what Boda Kaiser and that's what, I guess, Cal is. The traditional focus for a lot of groups was just the deeper copper porphyry model. The high-level epithermal gold system, the wall rock porphyry model, really wasn't applied. And that's leading to a lot of exploration success across the belt at the moment. So ultimately, the majors that we're pitching to are predominantly looking to back the team, one, to operate and do the permitting, the landholder access, all that. But it's the IP and it's the targets that fundamentally is what drives the value.
Any other final questions? Yep.
Congratulations on that cash position. As you go through your drill target plan, how long will that cash last?
That's a debate that we're having at the moment with the major shareholders, the advisory board and the board. We know how difficult it is to get cash, and when you've got a balance sheet like what we have, you've got to be very frugal and focused with it. Do we solely focus on getting further partners in, or are there some activities across some of these projects that we think we can add value to? And there's no right or wrong. It's what's the right thing at the right point in the market. But we had a board meeting just last week, and John, our technical director, very sort of sagely said, look, you could drill all the targets that have come out of these reviews and on the projects that we've got, and you'd still have double-digit million cash position. So it's a good position to be in.
Okay, last question.
Thank you. Yeah, good morning. Is there a rule of thumb in the industry, not necessarily just with Kincora, in terms of what your break-even is for grams per ton? Because I saw somewhere on the presentation 0.1 grams per ton, and in most cases it's 4, 7, many more in the double digits. So I'm just curious. I don't know.
Yeah, and again, sort of each deposit sort of depends on strip ratios, overburden, all those great things. But for simplistic purposes, we're looking at sort of 0.6 copper equivalent, gold equivalent from an open cut. And if you're looking for an underground operation, you need probably 1.2% equivalency. And that's if you've got the right dimensions, like these block caves that you can see with Cadia, for example. Cadia at the moment, I think, is only mining 0.6 grams a tonne gold and less than 0.4 copper. But because the infrastructure's already been paid off, it's just they're moving 36 million tonnes of rock, and it's a money-making machine.
So it's different for all the metals, copper, silver?
It does, but I guess just from a very simplistic perspective, we sort of think of that 0.6 and 1.2 as rough rules of thumbs.
Okay, Sam, in the interest of time, we're going to have to finish there, but you've got something that you want to give away, because we're Aussies.
Yeah, did anyone find a business card under their serviette?
Under their a napkin. And if you haven't, look at the napkin next to you. There should be... And Sam, I think you've got a fair idea of where you put it. Gentlemen here, forget it, guys. Settle down. The one that asks the last question gets the prize. There we go.
So... We've got a bottle of Aussie Pinot from near Cadia. So,
Thank you so much. Very generous.
Pleasure.
Appreciate it.
Thank you.
Thank you all for coming, and please come up and have a chat with Sam and ask some questions, and enjoy the rest of the day. Thanks, everybody.
Thank you.